there is a misconception that Benami property is about property purchased with black money. It is not so. Basic ingredient in Benami is that the person who provides funds to purchase the property is different, the beneficial owner, and the on-record owner is different. The on-record owner is called the Benamidar, whereas the real owner or the real person who provided the funds for the purchase of property is the beneficial owner. So basic idea behind Benami property or Benami transaction is to hide the real identity of the real owner by showing someone else as the on-record owner. That someone else is the Benamidar. Now, if you merely because you invest black money, property does not become Benami property. For instance, you invest your own black money, your own white money, and property is registered in your name. Here, you are on record, you are the owner, you have paid the money for it through both black and white. So this is not a Benami property. The second misconception is that Benami property is only about immovable property. Again, it is not so. Under the new definition in the Act, effective from 1/11/2016, Benami property covers all types of properties, including cash deposited in bank, including jewelry, covers every single type of property. Third misconception is that Benami property applies only to individuals. Again, it is not so. The Benamidar, that is the on-record owner, can be any entity, individual, firm, HUF, company, association of persons, body of individuals. Likewise, the true owner can be any person, be it individual, HUF, firm, company. So there is it's a total misconception to say that Benami property applies only to individuals. It applies across the board to all entities. So Benami property is one where the identity of the real owner is hidden, the real owner who provided funds for purchase is hidden, and property is on record in the name of someone else. Now, the Benami Act was first introduced in 1988. It provided a very confusing term called acquisition of Benami property. Now, acquisition invariably means that when government acquires a property, it has to provide compensation. Now, how the compensation is to be calculated, how it will be acquired, all these modalities had to be prescribed by rules. But the law ministry said that so many things cannot be prescribed by delegated legislation of rules, and that is why the Benami Act remained in limbo since it was enacted for 28 years. And now in 2016 the Act was amended and it was strengthened up. So now the new amendments in the Act provides that Benami property can be confiscated by the central government. Now confiscation is not mere seizing. In seizing, only the possession changes from one person to another forcibly. In confiscation, in addition, the title passes from the person to the government. There is a vesting of title in central government. So the moment the Benami property is confiscated, you cease to be the owner of the Benami property, and it is the central government which becomes a new owner. Now the Benami property cannot be retransferred back by the Benamidar to the true owner, nor can the true owner file any suit against him to recover the Benami property. And in addition, the Benamidar as well as the beneficial owner are liable to prosecution under the Act, and even with prison sentence of 7 years, up to 7 years, and also to pay a fine up to 25% of the fair market value of the Benami property. So this Act has got serious consequences for the Benami properties, and it has a wide implications not just for the immovable property but to all types of properties, including deposits in Jan Dhan account done by some black money holder in the name of the deposit holder. Now, what is a Benami property, a Benami property transaction? The Act provides for 4 categories of Benami transactions. The first one is a very genuine transaction in all respect, but only that the consideration is provided by someone else and the property is registered in the name of someone else. But here there is no intention on part of the consideration provider to benefit the Benamidar. If there is that intention, then it will not be a Benami transaction. The Benamidar holds the property in his name for the benefit of the beneficial owner or the true owner. So this is the first category of the Benami transaction. Second category of Benami transaction is where the transaction or arrangement in respect of a property is carried out or made in a fictitious name. Now, one cannot understand the words used, how a name can be fictitious. But the intention here is that the Benamidar is a fictitious entity, an on-paper entity which doesn't exist. So that could be the interpretation given to it. Now the third case, a transaction or arrangement is in respect of a property where the owner of the property is not aware of or denies knowledge of such ownership. A case got reported yesterday wherein in Nagpur 4.25 crores were deposited of black money, demonetized notes were deposited in the names of a lady and some 6 accounts of hers, including her and family members. And when the lady was confronted with this 4.25 crores deposits, she denied the knowledge of the account having been opened by her any time. All she could recall was long back she had given an identity proof or an address proof to some relative of hers, and probably that has been misused and the accounts have got opened in her name. Now here the lady is not aware that the owner is not aware of the transaction, is not aware of the property in name. Similar things happen in corruption cases where CBI raids the premises and opens the lockers and everything, and they find that there is a lot of jewelry and other valuables seized. And a corrupt person says that it belongs to his wife and it was gifted, and the wife flat denies knowledge. I have no idea how this came. So this also comes under the category of Benami property. Here a question arises whether what will happen to the property, because here one is not aware if the property is there in the name. Obviously the person, the Benamidar, has been a victim of fraud, like in the Nagpur case where 4.25 crores were found deposited. A question arises where prosecution will happen in this case. One thing is certain, in this case the 4.25 crores would get seized under the Benami Act, it will get confiscated by the government and it cannot be got back. Secondly, the lady who was a victim, when it is found she is a victim, there will be no prosecution, because the prosecution provisions clearly talk about enters into a Benami transaction. The word enters into shows a modicum of consent, which is not here. So one thing is clear, without consent you can be party to a Benami transaction. The Benami property will get seized, but you will not be prosecuted. If it was done without your consent, you are a victim of the fraud. And last category is a transaction or an arrangement in respect of a property where person providing the consideration is not traceable or is fictitious. Now you are confronted where you got this property from, and you explain that so and so gave me the money, and the so and so when confronted says, I have not done anything and I know nothing about it. So here is a case where the consideration is provided by somebody who is not traceable or who is fictitious. And this is the fourth category of Benami transactions. Now, it's interesting to note that in the case of category 1 transactions, certain exceptions have been made because there is an element of genuinity to it. We have found that categories 2, the second category, third category and fourth category transactions involve an element of deception, much more than merely obscuring the name of the true owner. The first category has an element of genuinity to it, and therefore certain exceptions have been provided to it. The exceptions are, firstly, where a karta or member of HUF, property is registered in his name, and the funds have been provided by HUF from known sources. Again, the second category is where fiduciary capacity, like we find in the name of director, partner, property is registered, and even cases where the depository, the demat holding, where the depository holds it in its name but you are the beneficial owner, that has been exempted. Third category is where an individual registers the property in the name of his spouse or child, and the consideration is paid by the individual from his known sources. If it is not provided from known sources, it will come in the realm of Benami property. And lastly, even properties registered in the name of brother or sister or lineal ascendant or descendant will be out of the purview of Benami transaction, provided it is in joint ownership of the individual providing consideration and that relative, and the individual providing consideration does so from his known sources. And the fifth exception that is out of the purview of Benami is power of attorney transactions, where the possession is taken by the transferee, but the title remains in the name of the transferor, and the agreement is registered and stamp duty is paid for it. So even though the transferor property still stands in the name of transferor, and property the possession is with the transferee, it is a genuine transaction. Possession has been taken by the transferee. So to that extent, and the possession can be defended under section 53A of the Transfer of Property Act, and therefore this kind of transaction also has been given an exclusion from the. But one thing must be understood here: in these power of attorney cases, the power of attorney, the transferee who holds it under power of attorney, will have to get it registered in this name. Will have to get the sale deed registered in this name using the power of attorney. Then only he gets a proper title. The power of attorney, will and sale agreement by themselves do not convey any title to him, any proper legal title to him. Supreme Court decision in this respect stands. Only thing the benefit he gets is he can hold it without coming under the Benami Act. Now these are the exemptions which have been given from the scope of the Benami transactions. I have a question here. Can I pay tax and get my confiscated property from government? The answer is a clear no. Once the confiscation is done, once it is found to be a Benami property, confiscation will follow and property will vest with the government, and paying tax, one cannot get the property back, and prosecution also will follow. What is the amount I have to pay for releasing the property if confiscated by authority? If confiscated, then the property vests in the government and there is no redemption fine like in the customs, where you can pay some penalty in lieu of redemption and get the property back. Whether Benami property can be declared under Pradhan Mantri Garib Kalyan Yojana. The Benami property cannot be declared under Pradhan Mantri Garib Kalyan Yojana. There is no provision for it. In fact, the section 119, proposed section 199O clearly says that if there is any violation, any liability for prosecution under the Benami Act, the person is not eligible to declare it. The Benami properties could have been declared under the Income Declaration Scheme 2016, which was open from 1st June till 30th September. And if it had been declared at fair market value, the Benami property had been declared with the real owner at fair market value, and he has paid all, and he pays that 45% of the total declared amount in proper installments on 30th November, then 31st March and 30th September 2017, and he gets a Benami property transferred back into his name from the Benamidar. Then if all these conditions are satisfied, then the declared Benami property under the Income Declaration Scheme can be got back and can be got retransferred and will not be liable for any confiscation or will not be liable for any action under the Benami Act. After paying penalty and other dues, can I transfer my property to other person? There is no such provision. In fact, the whole thing could have been done only if you have declared it under the Income Declaration Scheme. If you have not declared it under the Income Declaration Scheme, then Section 6 of the Benami Act clearly provides that the Benamida shall not retransfer to the beneficial owner. In fact, this will be the big problem with the Jandhan accounts, where some black money holder gives you the money and it gets deposited by the deposit holder in his Jandhan account. And then the black money owner, the beneficial owner, the real owner of the black money wants to say, I want it back in new notes. There is a total prohibition on part of the Benamida to retransfer it back. So it cannot be retransferred. The retransfer was there for a limited window where you declared your Benami property in the income declaration scheme and you have paid the necessary taxes under that scheme. Will made by the non-family member, is it considered Benami? No. Will made by non-family member does not come under Benami because the title passes only after the demise of the maker of the will. And here there is no duality that the property is registered on record in someone's name and someone else is the real owner. That duality is not here. It becomes clear-cut ownership of the person on record and beneficial vests in the person in whose favor the will is made. So will, gift, these things don't come under the category of Benami because the moment you gift again, the donee becomes the full owner of it. I don't want to get into litigation and pay penalty. Should I transfer all the properties from others in my name? Should I transfer all the properties from others in my name? Now, what could this mean? That you have a property standing in your name and beneficial owner is somebody else and you want
someone else and you want to take back the property.
That you could do only if you have declared under the income declaration scheme. This can be done only if you had declared it in income declaration scheme.
Can it be done now?
It cannot be done now. It's foreclosed now. If you have not declared it as on 30th September in the income declaration scheme, you cannot now get it back.
Can it be done under Income Tax Act?
Under Income Tax Act, again it cannot be declared because Income Tax Act, if you declare it, now the Section 69A inquiries under Income Tax Act will be very tricky because if you are not able to explain the source, then the Benami angle can kick in and he can refer the matter to the officer handling the Benami inquiry. The officer can send it from his table to the Benami officer, and this can be misused. Hope that CBDT comes with suitable guidelines to say that in which cases when the person is not able to explain the source of his property, matter will be referred to the Benami.
So even if the assessee pays tax under section 115 BB,
that counts for nothing because assessee by implication of the Income Tax Act pays tax on his income. When the whole thing is liable to be confiscated and is liable to vest with the government, there is no question of him paying any tax on it. The entire thing is liable for confiscation. It is not as if you pay the tax and you can keep the rest of the thing for yourself.
So even if the property is confiscated, is the taxpayer still liable to pay taxes on the property?
That cannot be said because when what does not belong to him, when it is not his income, even if it is from an unexplained source, income has to be his to be assessed on it. If it does not belong to him and if the entire thing is liable to be confiscated, then I don't see how he can be made to pay tax on it. Who is liable to prosecution when black money is detected in Jandhan account? Very interesting question. Now here it depends entirely on whether the account holder is complicit in the whole transaction or not. If the account holder is complicit in the transaction, then he is equally guilty and even he will be liable to be prosecuted. Now supposing somebody has misused the Jandhan account and has unauthorizedly accessed it and deposited money, and when the Jandhan account gets an SMS holder, he gets taken aback, he reports the matter to the authorities and he cooperates with the authorities, then the amount will be confiscated, but there is no way he can be prosecuted because the prosecution provisions are clearly worded as who enters into transaction. The word enters into transaction shows an element of consensuality in it. So if you are a party to a fraud and you have unauthorized access and you cooperate with authorities, the amount will be confiscated that was deposited by the black money holder, but there is no way you can be made liable for prosecution. This is what appears from the wordings of section 53, the prosecution provision. What if I have rupees 500 after 31st December? Now, it depends on the quantity you have. Frankly speaking, I see quite a few people want to keep a memory of the old 500 notes, and they may keep one or two notes of the 500 or 1000 with them. I don't think that should be coming under the violations of the Currency Act or the RBI Act. I hope that the government makes suitable provisions saying that you can keep a few for your particular number or amount for your numismatic collections or memory, but you should not circulate it. Subject to that, there will be no prosecution. But if you keep a large quantity of it and you are seen to be circulating it, certainly you are liable for prosecution. Whether jewelry gifted by my relatives on my marriage is come under Benami Act, it certainly will not be covered under the Benami Act. Because it has been gifted to you, there is a clear-cut transfer of title to you. There is no duality of ownership. That the relative is not keeping is not intending to keep any hold on that jewelry. He is giving it to you entirely for your enjoyment and your benefit. And it's an out and out gift. So after the gift, you become the owner of those jewelry. It is not as if that you are the on record owner and the person who gifted it is the real owner. That duality doesn't exist here. Only thing is that you should keep proper documents to prove it, that it has been obtained from your obtained on occasion of marriage. If you can keep proper documentary evidence to substantiate it, it will be entirely tax free under 56(2) VII of Income Tax Act as well, and there will be no, it will be tax free for you as well. What is the tax rate if I want to declare Benami transactions? Well, actually, if you declare Benami transactions, whatever money you have will be confiscated, 100%. So you can say it is a 100% tax rate, and in addition the prosecution and penalty. And there is no redemption fine under the Customs Act. In Customs Act, one can get back the smuggled goods after paying a redemption fine in lieu of confiscation. Here there is no redemption fine in lieu of confiscation. So you cannot get it back under the Benami, whatever is confiscated. Whether I am liable to be prosecuted under a Benami Act if someone has acquired property in my name without my knowledge. If that is the case, it will be confiscated, but you will not be prosecuted, because section 53 clearly refers, section 33 of the Act clearly refers to the word whoever enters into a Benami transaction. Again, section 53, which is connected to section 3, subsection 3, clearly uses the word whoever, where any person enters into a Benami transaction. So both cases the word enters into is used. And in view of the word enters into it, there has to be consensus or your complicity in it. If your complicity is not there, then you cannot be prosecuted. If you are complicit to the arrangement, you can be prosecuted. What if one has decent amount of deposit in account but unable to access the source? Deposits is made at once, but cash accumulate over a period of time. What is being said here? What if one has decent amount of deposit in account but unable to express the source? Deposit. Basically, it will. I hope that CBDT issues suitable guidelines here when it is to be treated as unexplained income and when it is to be treated as when it is to be investigated for Benami. And I hope that this Benami thing angle is not used by used as a source of harassment. Hopefully, CBDT will come out with suitable guidelines in this matter. Whether property held in trust for the benefit of son or daughter would be called as Benami transaction. Again, there is an exception for fiduciary cases. Fiduciary cases are outside the purview of Benami transactions. So, if there are any further questions also, we can post them and we will be very more than happy to answer it. I thank you for the wonderful interaction we have had, and hopefully we will be able to get more questions and we can take this forward.